Very good morning again, everyone. Charles here of FRGNT Daily Chart Analysis. Tuesday, the 11th November 2025, 7:50 a.m. Milano. That's 6:50 in the UK. Pre-London Open. Again, just here at the charts, conducting that daily chart analysis to see what we have in terms of today's potential plays. Now, looking on the weekly chart, the bottom right-hand corner, I can see initially where my higher probable setup is likely to come from. And in my opinion, that'll be shorts from that daily 50 MA. That's going to align nicely with the previous weekly high as well, as price will look to fill that wick area, dipping into the daily 50 EMA, rejecting that 4-hour order block in and around that area as well. However, what we can see the here and now, and I think this is a nice pair for a good contrast, considering I am anticipating shorts on GU and potentially AU as well. Now, knowing that GU and EU are highly correlated, it would be incorrect for me to foresee long positions on EU and short positions on GU at the same time. So this is how we'll use two pairs or three pairs, considering AU, GU and EU, to figure out what would be the higher probable setup. Now, in terms of the here and now, we can see that if we are going to be looking for long positions using the higher time frame, there aren't any areas of confluence or areas of interest that I can see on that weekly time frame. So if we do still go down through the time frames as we are looking onto that daily time frame, the only thing we can really look or work with on that daily time frame is potentially the previous daily low. So we'll mark that on there, superimpose that through the time frames and see what we can work with. Now we can see on that 4-hour chart, we move that slightly below, we can see on the 4-hour chart that we are hovering in and around a 4-hour order block. Not only with that, we can see that as price was previously making lower lows, lower highs, lower lows, lower highs, lower lows, we have had that break, giving us that break of structure that we are potentially now in a turnaround after a higher high, higher low, higher high, and we are in that area of interest looking for a higher low before a continuation. So we can't discredit that. However, what must be said again is how price is reacting in and around that 4-hour 50 EMA. So I'm not going to discredit long positions at the moment just because my bias is short for GU and AU. We'll take the facts on board and see what we can work with. As well as that, I've isolated a 4-hour wick imbalance that we can see previously this wick here was filled, creating another wick as we have had that buying pressure come into the market from that 4-hour order block. Now I've superimposed that line across and we've called that 4-hour wick imbalance again. So this area of interest is beginning to stack in terms of confluence. Now what we must be aware of is our range. Now if we are to get in, or if I am to get into a position from this area, I know that my initial target has to be that previous daily high, especially because I'm aware that GU and AU are in areas of interest that I could be looking for potential shorts. So again, that's working against me, but we'll take the facts on board. In terms of the short, I hope you can see that that would align for a more than higher probable setup. If I were going to say, well, take one position only, a short from the daily 50 EMA or a long from current price action and positioning, I would opt to take the short position from the highs as opposing to taking a long position from this area here. However, with that said, as an intraday trader, I'm happy to get in any position so long as the facts align and the position makes sense. Now, if we go to the 1 hour time frame, what we can see is price is almost stalling at this area. And why do I come to that conclusion? Well, again, higher highs, higher lows, higher highs, higher lows, higher highs, potential higher low, and a failed higher high. Price has come back into that area and has not given us that reaction that we'd be looking for. Again, if you look on that 4 hour time frame, you can see quite clearly, if we just draw an evident box around that area, that price is stalling. So again, my range, I'm aware of my range, that if I am going to take a long position, I need to know that I am simply trading a range. Pardon the noise, Central Milano can get a bit noisy. So again, price is stalling in and around that area in the 4 hour time frame, clear range bound. Therefore, if I am going to get in the position, I need to ensure that I'm longing from the lows, and if I am going to take a short position from the top, the same occurs. I need to take a short position from as absolute high as I can in terms of refining my order blocks. Now, what we can say as well is this area of interest, this 4 hour order block, although it is being respected, it has tapped multiple times, and price isn't giving us the reaction that honestly we'd like to see from an order block. Now, how would I get in a long position? If I bring your attention over to the top right hand chart, you can see that 15-minute time frame. Now again, we can see that price is failing to make higher highs. After that initial high, price has come back in, failed to make a higher high, come down again, and it's failed. Price is stalling. So just because price is in an area of interest, it doesn't mean that the trade must be taken if you can see that the facts aren't aligning, even if it supports your setup. So the key to being a successful trader is also knowing when to trade and knowing when not to trade. So I already know that my most highest probable setup would be the short from the highs. However, again, as I say, does that mean I shouldn't be getting in a long position? Perhaps not. So what am I going to be looking for? I need price to show me that it has every intention of flipping bullish again. So therefore, I've isolated a point in the market and I've called it a structure point. I would like this area to be broken, price then come back into an area of imbalance that is potentially left behind before then taking a long position after a lower time frame break of structure. What we can see again in this area is that price came into a 15-minute order block created over here after would be forecasted for a potential higher high. It wasn't made. However, price came in, and again, as you can see, it failed to give the reaction that we need. Therefore, this is imperative that we have it. It's a requirement before looking to take that long position. A break of the structure, come back down, give me a lower time frame break of structure, retest those previous daily lows, find an order block on that lower time frame, again see another shift of price action in terms of a bullish sentiment before looking to get in. And then as I'm already aware of my range, roughly 40 pips, therefore my entry must be spot on, covering those previous daily lows. In an ideal scenario, price would come all the way down here, allowing me to cover those lows. This area that you can see just here to the left, if I circle that for you, would like to cover those in an ideal scenario. That would allow me to get in, have my stop loss tied underneath, and reach for those previous daily highs. Most unrealistic to have a 5 pip stop loss, be more in and around the areas of 10. So we're looking for a 1 to 5 there potentially if the previous discussed occurred. Thank you very much for listening. That's Charles, approaching 8 o'clock now Milano time, 7 UK. FRGNT daily chart analysis. Do take care. All the very best.